This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past year, interest rates in the United States have been one of the biggest drivers of financial conditions across the economy. The Federal Reserve raised rates aggressively during the inflation surge, pushing borrowing costs higher for mortgages, credit cards, and business loans. In recent months, however, the conversation has shifted. Instead of asking how high rates will go, many economists have started asking how long current levels will remain in place before easing begins. This week, new economic data and comments from policymakers suggested that interest rates may stay elevated for longer than some markets previously expected. While inflation has shown signs of stabilizing, policymakers continue emphasizing the importance of keeping financial conditions tight until price pressures are firmly under control. As a result, the current trend still points toward a cautious approach. Rather than quick rate cuts, the signal from this week's developments suggests a slower path toward lower borrowing costs. For households, that matters in several ways. Mortgage rates remain relatively high compared with the extremely low levels seen a few years ago, which continues to affect home affordability. Credit card interest rates and auto loan costs are also closely tied to broader interest rate trends. At the same time, higher interest rates can benefit savers. Many savings accounts, money market funds, and short-term investments are still offering stronger returns than they did during the low-rate era. In practical terms, the current environment means borrowing remains expensive, while saving is somewhat more rewarding than it was in previous years. Looking ahead to next week, investors and policymakers will be watching upcoming inflation indicators and labor market data. These reports play a key role in shaping expectations about when the Federal Reserve might eventually begin lowering interest rates. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.